And that covers the long side. And boy, we have a long short side to cover, so bear with me, folks. It's going to be a long video today. Let's take a look at some of my picks over the last few weeks and months. When Apollo Education broke out of this wedge and got cream that formed that wedge, I said, the entire group looks terrible. This is going lower. That was at 16.5. It subsequently got down to 10, and now it's bear flagging. My target, 8.5, 9. That's how bad this looks. BEAV, that's aerospace. Massive top, broke the trend line, stair-stepping its way lower. Each time it rallies to resistance, and plunges. Is it the ideal point right here? No. Rather, 47.8 short would be a good place for a move down to 40. BKD, this is also plunge, but I want to note that I showed you the head and shoulder top, the breakdown, the snap back to the trend line, a little mini wedge formed at that point right here. Then it broke down and formed the bear wedge, at which point I said, this is going lower. Plunge from 33 to 24. To me, it's going down even lower, maybe to 21, but it is short-term oversold and it could snap back. That's the problem with shorts, folks. When you're in a stock that's spiking down, cover the damn thing and wait. You may get a better opportunity. If it goes lower, so what? You made money. CAB, looking ugly, ugly, ugly. And again, this is an education. This is a retail stock that broke its trend, rallied back, rolled over hard in a 1, 2, 3, 4, 5-wave mode to the trend line. That's why you cover when it reaches the trend line, and not far from support. Is it a short now? Yeah, anywhere near that range, but it's a little too strong for me on price-wise, not technically. So I would be confident that it's going lower, but I'd stop it over 40, over 50. I'm covered. Caterpillar, geez Louise, look at this. Left shoulder, head, right shoulder, breakdown, snap back, and this took out a lot of stops. And then a plunge in a 5-wave mode, rallied back in a big wedge, and plunge again in a 5-wave mode. 1, 2, 3, 4, 5 waves down. I'm covering that stock down here. It may go lower, but I'd still cover it. CCOI, head and shoulder top, breakdown, snap back to the neckline, and roll over. Long-term support, well, maybe in here, but if it breaks this, we're looking at 2021. CEB, a boxer swing short, plunged, bear wedge, plunge, and bear wedge. One more leg down. Well, if we take out 67, we should see 64, maybe even 59. Those are my targets, and I'm sticking to it. Cerner. Well, the double top broke. It snapped back to the neckline. It failed. It did it again and on the bear flag, and then it broke. On Friday, it dropped in 162. You can see that it could easily get down to test the lows in this zone between 55.5 and 57.5. But if it breaks that, it can plunge down towards 50. Wouldn't surprise me at all. CNPR. Well, I actually thought that this rally here and this would look like a wedge here was going to result in rollover. And for a couple days, it looked great. Then it rallied back up. And what it did is it formed just a larger bear wedge, right to the trend line, moving average, and price resistance. I think it fails here. I think this is 1 and 2. I think 3, 4, and 5 could take this into the high 40s eventually. But for now, keep an eye on this one. If it breaks, this could break very hard. Rockwell Collins broke, bear flag, bear wedge, and it's still coming down. My target has to be down in the 73, 75 zone. All the railroads look terrible. When Canadian Pacific broke back in May, June, I showed you this bear flag and said this looks a lot lower. 1, bear wedge, bear flag. I don't know where this stops, folks, but it ain't pretty, and it could eventually get down to 113.15. CPLA, another educational stock, plunges here, snaps back in a bear flag, another little bear wedge, another little bear flag, and a little bear flag. Wow. Well, it's not pretty, and I think it goes lower. Where to is a difficult story. Look at this. Is it possible we go back in the mid-20s? Anything's possible. First target, if it breaks this low, about 46, would be down around 39.40, and then we're in follow-in mode, like we were here and here. Stock has a history of doing that. CPLA, down goes Frazier. CRI, well, Carter's could be rolling over here. It looks a lot like RRGB. Look at this. Almost the same pattern. Both of them have plunged, forming little bear wedges, and then 1, 2, 3, 4, 5, wave 1 and wave 2. Now if it falls apart, I suspect it quickly tests 90, it may test 87, it could go down all the way into the 80 range. Prieto, well, we put a swing short here, and boy did that work, and quickly. Then it snapped back, pulled down, popped again, I'm not sure what this is, but the technicals don't look good on this. I would have to say that's one big bear wedge, and that we run back down to 35, 33 range down here, at least. CSII, plunge, bear wedge, then comes down to test the trend line and bounces. There's about a 0.382 Fibonacci retracement and fails right at this level. Let me show you. Prior high, snapback high, forming a new down channel, and then it creamed at the bottom of the channel from the bear wedge, which I noted, and then from 24 down to 17, and this looks terrible. But it's oversold short term, and I wouldn't be shorting a stock like this unless you're in it, in which case I'd cover. CT, constant contact. Well, it broke here hard from the rising wedge, broke hard again, forming another one. Is this due for another crap out? Well, I think you're going to see 21 too. Cyanoshore, little mini head and shoulder breakdown, snap back to the moving average, creates a new declining channel, forms a bear wedge, a bear flag, breaks down. Why should it not get down to 28? 25? Those are my targets. Data, hard break, bear wedge. Another break to the support, bear wedge. Another break to secondary support, bear flag. Roll over on a reverse on Friday from 87.82. Looks like $75 stock coming up, folks. Deckers. These are ugly charts, everyone, and this is just a small sampling of what's out there on Wall Street. Double top, breakdown, multi-month consolidation, breakdown, bear, wedge, or flag, breakdown. As far as I'm concerned, Deckers looks terrible. It's on support here, but it could easily go down to 50. Dollar Tree. Breakdown, snap back to the moving average is crushed. Snap back to support. Rallies back up. And it's right at a point where I would consider shorting it, but I'd be careful in here. We're right at that point where I don't want to go much higher. Yes, this rally has come on a weak volume and terrible technicals, so I'm looking for lower levels. I think we're going to retest 63. We may come down to 58. DOV, if you look at it on a weekly, you'll see a massive top. See it on 2-day chart. Breakdown, consolidate, breakdown, bear wedge, breakdown again, and rally off support. A little bit too close to the bottom of the channel for me to be much more excited about as a short. But sometime if it gets back up in that 61 range, I would look for a shorting opportunity down to 51. EMES, what can I tell you about this one? This is the star short of the year, no question about it. Show me a stock that did worse than this. There may be a few, but 145 to 8, I still challenge you to show me one worse than this. 145 to 8. I've been talking about how bad this looked all year. Kept talking about the bear wedges, the bear wedges, the bear wedges, the bear wedges. And even gave you a short earlier in the year. The stock rolls over from 40 to 8. What would I do here, folks? I would actually cover my short. Somewhere in this range, it's oversold. Now, it could go bankrupt. It could, but if you get down from 147 to 8, don't be a pig. FGP, Feral Gas. Massive top breakdown, rally back to the neckline, bear wedge, another wedge, another wedge. Wow, looks like 18 and maybe 15 coming up. Fossil, but I've been talking about designer stocks as being ugly all year. When this broke here and formed that bear coil, that's where I got very negative on it. Another one there, very negative on it. Another one here. Why get bullish in this stock? It looks like a $45 to $47 stock at least. HAR, well, it broke here, it snapped back, it broke down hard and snapped back, it's breaking again. I'm not sure how bad this looks, other than it just does look bad. $84, if this is broken, it's in plunge away mode, fall away mode. HBI, one that may be just starting, double top plunge bear wedge. If it starts now, we're going to see 26 and 24 and maybe a lot worse. HCLP, the sister company for, when I say sister company, both in the same group at EMES. This one only dropped from 70 some odd down to 9. But, again, I'd be covering down here. Icon, again, I showed you the bear wedge flag here, but the bear wedge here is what really got me at 27. It dropped down 11. Again, wouldn't be necessarily shorting a stock. It's already gone from 45 to 11, but it doesn't mean it can't go lower. ITW, maybe just starting, broke the trend line here, snapped back to it, plunged from the bear wedge, and maybe falling apart. The support is 77, 79. We get through that, we can be 68, 70. Another designer stock is Kate Spade, broke hard, and it's got a bear wedge. I don't know how far this goes down. I could see the stock dropping all the way down at some point into the mid-teens and maybe even low teens. Coors, same thing, continues to fall apart. Bear wedge, bear flag, bear wedge, bear flag, down, 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 and another bear wedge. Unless it gets over 46, I'm staying short. Kansas City Southern, just another negative railroad, looking terrible. Manpower, a recent new boxer short. Why? Well, when a stock plunges off the high and forms a bear wedge, I'm going short. Okay? The stop is easy. It's above 90, 90 and a quarter. But for me, if this doesn't plunge next week and come down to 77 or even 72, I'll be surprised. The measured move alone from 97, say, to 81 is 16 points. From 90 gives you 74 down here. Keep an eye on Manpower next week. MDU, it's just another box of short that I've had for a long time. This head and shoulder pattern plus this breakdown and bear wedge is what caught my eye, 31. Sure enough, 16. And where's it going? It looks lower. MNK worked very well for us. It plunged and formed the bear wedge. I put on a short. It dropped from 100 or down all the way down to 68 in a 5-wave mode. Am I more inclined to cover it here? Yes. Can it rally and then roll over to 57? Yes. NOV, again, another oil stock that's dropped from the high 80s down to the low 30s. And it's still looking like it's in a bear trend, but it's so long in a bear trend, I wouldn't be aggressively short. Another railroad looking at ugly is Norfolk Southern. OVAS, beautiful bear wedge right there near the moving averages, plunged. I can see the stock testing the 13, 14 range quickly. PCRX, wiped. It broke the neckline here of that topping pattern, snapped right back to it, rolled over and bounced. Lower low bounce, big plunge. This went from 69 to 45 in a flash last week. Would I cover here? Yes. Can I go lower? Of course. Parker Hannifin, massive top and just breaking the neckline. Where's the support? I think there's a strong chance we get down to 85 in this one. PSIX, rollover Beethoven. My target is 21 and then in the mid-teens. Qualis, it's been a boxer short for a while. It broke and had a bear wedge. Ran up a little bit further, then came down. Formed another bear wedge, ran up a little bit further. Failed at the moving average. Failed at the declining tops line. Plunged. Now it's doing the same thing. And Friday, it broke apart. Targeting 23. Red Robin, plunged and bear wedge. That's all you want to say. Targeting 70 and 64. Sandisk in a long decline with multiple bear wedges and flags and steps down. I'm not inclined to be short any longer, but plus I'm hearing takeover at these levels. TAL, boy, that worked out for us, didn't it? It broke this massive top, left shoulder, head, right shoulder type top. It formed a little bear wedge. I put a short on it there. There's another one there, a little flag in there. See it? Another one there. Down goes Frazier, all the way down to 1398 from 38. So more than half. Would I be short here? I could stay short, but I would cover above 6, say 15 3/4. If it gets down to 11, 12 zone, I'm covering. Or cover here, take your profit, don't be greedy. TDC, Teradata, it's a massive consolidation for 6, 7 months. Broke down. Bear flag, broke down, and right now, although it's at the bottom of the channel, it does look lower to me, perhaps down to 22, but I wouldn't be aggressively short here until I see a snapback. Right now, it's too far at the bottom of the channel. Same with Timken. After massive top formed here, it broke right there. This breakdown barely even bounced. Here it's a bounce, and here's a bounce, but it's had a massive drop. At this point, I would cover. Do I think it can go lower? Yes, but it's so far down from 50 to 27. I wouldn't get greedy and I'd move to something else. TNet, that was a beauty for us. It broke and I put on a bear short swing. It went from 29 to 14 and a half. Now it's got a big bear wedge. Can it go lower? Yeah, but where? I mean, this is an all-time low. Unbelievable. TRN, sloppy. It broke down a bear wedge. It broke down, had a big rising bear wedge, and then it stepped its way down. So it's kind of choppy and volatile, so wouldn't be the first one I look at. Tupperware, well, again, another topping pattern. Broke down. There's your bear flag. Breakdown, snap back to resistance. Roll over hard from 72 to 48. Would I be inclined to go short here? No. Doesn't mean it can't come down to low 40s, but it's already at the bottom of the channel near my targets. UAIC, that's the beauty. It broke bear wedge, it broke bear flag. I put on a swing short, I think here or here, but it's dropped from 50, let's call it 59 to low 40s, and it looks to me like we can see, 41 or even like high 30s, maybe eventually all the way down to 34. Ugly. Another railroad looking bad, Union Pacific, UPS. Now let's look at this one. A massive top is forming. Don't let this break down here. If this breaks below, say 93, it can fall away. 86, 82, and much lower. URI, another ugly chart. Box is short. Bear flag right there. That's where I noticed it for the most part. At 91, it plunged to 57. Rising wedge, and it plunged again. Now there's some support in this zone. I'd be less inclined to be short this stock. I do think it can get down to 50, but let's see what it does if it rallies back to 66.7. Right now, it still looks negative long term, right? Varonis has been one of my shorts for a long time, and you can see why. Broke down bear flag, broke down bear wedge, broke down multi-month consolidation, break down bear wedge, break down retest. Ugly. This is an all-time low hit Friday. All-time, I believe. 1667. That is correct. It could very well plunge into the high single digits, low teens. And lastly is Yelp, which, despite everybody being bullish on it back up here, I looked at the weekly chart and said, that's a massive head and shoulder top. It broke down and bear wedged. This is where I got a bearish on it right here at 45, 47. It's dropped down to 20. And it doesn't look good. My target is 17 eventually, but it's at the lower end of the channel. Folks, that's an exhaustive look at the markets, both long and short. At this point, I'll take your questions. Is yes, potential.